Uh, Hello, everyone. Welcome to another episode of the Alt Investor podcast that equips you with the right knowledge to make your decisions with respect to alternative investments. My name is Yash Roongta, and I'll be your host today. And today I'm delighted to welcome Neil Borate, who maybe doesn't need an introduction in the personal finance and investments space. But for those of you who don't know him, Neil is the deputy editor at Mint, leading the personal finance segment, and has been with Mint for almost about 5 years now. I discovered Mint via their beautiful, crisp, and concise infographics. If I'm being honest, I have tried to replicate that same format for my own alt investor kind of articles, but I've failed terribly at it. But the Mint ones are very incredible and full of learnings. Neil is also one of the co-authors of the national bestseller, The Big Bull of Dalal Street, which is based on the story of Rakesh Jhunjhunwala. Uh, it's my absolute pleasure to have you, Neil, on the show. A very warm welcome, and thank you so much for taking the time to record this, especially on a Sunday at 8 p.m. How are you doing today?
Great, Yash. Thank you so much for having me. That was a very kind introduction, I have to say. Lovely being here.
Thanks, Neil. So let's get into it, Neil. Now, we our agenda to talk about today is, alternative investments, and I know from multiple podcasts and interviews you have termed yourself as a deeply pessimistic person, and which is why I think so I'm very interested to go through this recording and understand your view particularly on alternatives as a whole category right now, which is kind of picking up very fast in India. So to start with, when you hear the word alternative investments, what comes to your mind? What kind of products comes to your mind?
So before I get into today's ecosystem of alternatives, I was just thinking back to what India had traditionally, right? India
Mm-hmm.
had money lending. India had collect like bishi jo bolte hai, that different people come together, they create a pool.
Mm-hmm.
One person takes the pot by rotation in deploys it in
Mm-hmm.
their business returns. So there's a long history of what today we would call alternative investments, and they served society more or less well for a long, long time.
Mm-hmm.
Um, what then happened is, of course, that the formal financial system came into being, formal regulations came into being, SEBI came into being, and it's still a work in progress. So a lot of alternatives today, which are not yet regulated by SEBI, over time do tend to come under the umbrella of regulations.
Mm-hmm.
So that's the broad historic overview. I think among today's alternatives, the top or the ones that I see most being discussed would number one be P2P lending, because a number of
Okay.
fintechs have embraced it and have offered it to thousands of customers.
Mm-hmm.
Um, the other, there was a little bit of interest in startup funding in that whole boom, 2021 startup boom.
Mm.
People saw Shark Tank and they wanted to become sharks
Yeah.
themselves.
Yeah.
And I think some platforms also came up to offer these kind of unlisted stocks.
CSOPs.
Uh, yes, yes.
Yeah.
Um, then I'm not sure if you would term bond platforms as alternative, but it's definitely rapidly emerging.
Yeah.
Particularly after the budget change on debt mutual funds. So that removed the arbitrage that debt mutual funds enjoyed. Of course, I would say
Mm-hmm.
rightly enjoyed, but for better or worse, that's gone. So suddenly direct bond
Mm-hmm.
buying has come onto a level playing field, at least tax wise, in many ways.
Mm-hmm.
Then there is the emerging area of MSM REITs, and we will get into that further on in the discussion. I'm very excited about. So those are the few
Mm-hmm.
broad ones that I can think of. I'm sure there's a much bigger universe out there, and you can
Mm-hmm.
add on to the ones that I've missed.
Yeah, so I mean, I have personally come across a little bit more alternatives like invoice discounting as well. And I think so you also did a piece on Growpital on which is into agri pooling of money for agricultural financing kind of stuff. And there's a lot of platforms also coming up for solar investing because of the net zero targets by India as well. They all want to amplify that movement. And there are particular platforms which allow you to invest in EV fleets, lease them, buy solar panels commercially, all that sort of stuff. And then there are regulated OBPP platforms which are also coming up with SDIs, securitized debt instruments, which is like a pass-through certificate kind of model. I think so. You did a piece on that as well, and that's also picking up quite fast. Yeah, these are the alternatives, I think so, that I also know of. Personally, in my world, I have seen invoice discounting and asset leasing uh, uh, as one of the faster growing areas. P2P, the craze was there, and with the instant liquidity and fixed maturity products, they have picked up a lot. But we see the craze kind of slowly going down, at least from what I see. Uh, Great. So again, there are so many new platforms coming into the market. What do you particularly think about these new age platforms? Are they bringing any innovation into the market?
Definitely, in a broader sense, there is a lot of innovation that's happening. Because if you think about all of these models, essentially they are, the function of finance more broadly is to allocate capital to the best, most productive use. So with an area like invoice discounting, when investors help a company to get cash flows in time, or with even with P2P lending, provided it's done in a proper
Hmm.
manner with all kinds of safeguards, even there, you're making capital available to somebody who needs it. So creating a
Yeah.
win-win. Um, so there is overall, I'm quite positive on this. Of course, with the big
Hmm.
caveat that people start thinking that let me make a quick buck. And then there are all
Hmm.
kinds of claims made that this is a guaranteed return. Um,
Yeah, yeah,
the
yeah.
risks are underplayed, the returns are exaggerated. वो सारी चीजें होती है. So that is the other side of the
Hmm.
coin. But at its heart, it is financial innovation at play, and I hope it uh, grows and enters the mainstream financial system over time.
Uh, uh, okay, that's an interesting view. But what do you think the regulator sees in these platforms? They will always be behind the curve as I know them. OBPP regulation was also brought out later, but these platforms were already operating before. And now with fractional real estate, the regulator has come up with MSM REITs. How do you think the regulator sees them?
So they have a duty to safeguard the public, um,
Hmm.
and whenever any alternative investment, I think, reaches a certain critical mass where a large number of retail investors or large body of investors in general um, are entering it, then of course SEBI looks at it and eventually frames regulations, eventually brings it into the mainstream.
Hmm. And what do you think about the OBPP regulation, if you are aware? Uh,
So that's a classic case of in time regulatory action, and without too much damage, without too many. Normally, regulations follow some kind of disaster. You have
Mhm.
some scam, and then you have overreaction on the other side. So, for example, in case of registered investment advisors and the regulations that apply to them, it was a classic case of some people in Indore sitting and scamming people, and then a regulatory overreaction where all kinds of micromanagerial regulations were brought in. With OBPP, I don't think that happened because there was no disaster. It was just growing, and SEBI thought it's time to regulate. Um, so I hope that it becomes a template for all of the other assets also going forward.
So, and of course, the regulator is also now coming up with MSM REITs, and uh, you mentioned we'll cover that. So, what do you think about the regulation altogether?
So it's fantastic. I am very optimistic on this particular set of regulations. So again, to
Hmm.
go into a bit of background, there are already fractional real estate platforms that are allowing people to own bits of real estate, and that solves the biggest one of the biggest problems in finance today. That real estate is lumpy. Unless you have a couple of crores, you can't buy anything. Um, Now there are already REITs, like mainstream REITs, but there are
Hmm.
only three or four of five of them that are listed, and
Yes.
they can only invest in commercial property. Number one, they can only invest in
Mm-hmm.
completed projects, and they don't really unlock India's vast residential market, and
Okay.
they have to have an asset size of, if I remember correctly, 500 crores, which means
Correct.
that only the big players can be part of it. So the new proposals do two things. One is that by
Mm-hmm.
bringing down the minimum size of the REIT from 500 to 50,
Mm-hmm.
they will allow a lot more smaller players to come in, not just to come in, but offer niche bets on individual pieces of property. So
Mm-hmm.
currently, when you buy a REIT, you get ownership of, maybe 100 office spaces around the country.
Mm-hmm.
Whereas what can happen to the MSM REIT is that you can get ownership of just one specific office, maybe in your city that you see the potential around, and so that will allow a lot of savvy investors to unlock a lot of value. Uh, that's the big benefit of that minimum ticket size coming down. The other, as I said, is residential. So by default, a lot of us uh, end up with residential property, and
Mm-hmm.
it's not possible to sell bits of it. You have to do lumpy transactions. People are cut out of the home market because it takes years to accumulate even the down payment to buy a home.
Mm-hmm.
So this issue can also be solved if the sector picks up, if MSM REITs pick up.
Mm-hmm. So, but is this regulation mandatory for the fractional real estate platforms, or it's kind of optional by the regulator?
So we don't have the final paper out
Right.
yet. There is a draft, and then there is a SEBI board meeting which gave in principle approval to the regulations. But my hunch is that once the regulations are framed, they will be mandatory. I don't think SEBI will allow unorganized players to then continue.
Okay, got it. But okay, fair enough. Then the FRE platforms will have to have a minimum capital of 50 CR, at least in terms of their investments, like the pool of
That,
investments.
yes, if that provision is retained, so that is another provision from the
Yeah,
draft paper. I'm sure a lot of these platforms have made representations to SEBI in that consultation process. So the final paper might not mandate a 50 crore capital.
got it. Okay, thank you, Neil. Um, so, what other restrictions, Neil, are present on these fractional real estate platform given in the proposed regulation?
So yes, there are two main sticking points in the draft proposal. One is the minimum net worth for the sponsor of a REIT,
Uh-huh.
which is stipulated at 20 crores, of which 10 crores has to be liquid net worth.
Mm-hmm.
And the second is that the sponsor has to bring in 15%
Mm-hmm.
of the capital of the REIT. So we have to see if these two provisions are retained
Okay.
in the final regulations or some part of them is diluted. That's something to watch out for.
Okay. Uh, uh, Great, Neil. Very insightful on the MSM REIT side. Thank you so much. So, coming back to the point of alternative investments ecosystem altogether, we see a lot of investors now entering into this category, but you know, not everyone's profile is suited for these type of investments. From your perspective, which kind of investors should enter into alternatives if they can afford that kind of risk?
So I think there are two areas in which an alternative investor needs to be clued in. One is, of course, they need to have a substantial amount of money. If somebody has savings of just 10 lakhs or 50 lakhs, I don't think alternative is for them. It has to probably be in the crores or some multiple of a crore. The second more important
Oh wow, okay.
that's I mean the conservative view. The second more important thing that an investor should satisfy is knowledge, because this is complicated stuff.
Mm-hmm.
Um, you need to have a certain amount of financial sophistication, understand what is IRR, understand the risks involved.
Mm-hmm.
So, um, so that is probably even more important. Even if somebody has less money but is really, really savvy in this, then I would say that they are a better place than somebody with, you know, even 50 crores or 100 crores, but who doesn't really understand this space.
Mm-hmm. Okay, got it. So what level of transparency, let's say, should be expected out of these new age platforms, which might, you know, uh, bring more investor participation in a risk controlled manner? The reason I'm asking this is these platforms are really solving one core problem, which is, getting working capital to startups or to companies that really need it. If we take that kind of, if we take that equation out, then, there's again a gap in the market. Somebody has to fill that gap in the market. So we definitely need investor participation in some controlled manner, but these platforms also maybe need to do better in terms of the disclosures or transparency. What do you think about that?
Yeah, it's always a struggle for all platforms because the more you talk about risk, the more you talk about complexity, the more
Hmm.
the end investor gets worried, gets reluctant to put money. But in the
Hmm.
long run, this is how you avoid accidents. So I'll give you an example. I recently moderated the Parag Parikh Mutual Fund annual unit holders meeting. Now, Parag Parikh
Hmm.
Flexi Cap, which is their main fund, that has given a return in the past 3 years of 23% CAGR. In the past 1 year,
Okay.
it's been 27% CAGR. But in
Wow.
his presentation, the CIO, Rajiv Thakkar, said the main point he made was moderate your expectations. He said, uh,
Hmm.
he did a poll of the audience that what kind of returns do you think you'll get? And he said, your guess is as good as mine. But the kind of but he drove home the point that that returns in equity could be negative also, and uh, you have to expect something reasonable. So I think as long as the platforms communicate this very
Hmm.
strongly, even if there is a blow up, even if there is a problem, it doesn't lead to then a blame game and then court cases and all of that.
Okay, got it. And let's say if the risk reward ratio for an investment is, attractive, would you go ahead and personally invest in these platforms at this stage, or would you wait out a little bit longer until SEBI brings in more regulations?
So I think my situation is similar to a lot of working professionals, which is that so much of our time goes in our daily jobs. And although my job is very related to this field, I write about this stuff. But so much of my time goes in that I don't know if I have the capacity. And this needs you have to give time. It's not enough that you sit one evening,
Hmm.
some friend tells you a story over chai or over drinks, and then you say, okay, chalo dalte hain. So so I don't know if I cross that threshold. The other thing is that when I think of my return expectations, they're largely modest. They are being met through my current investments, which are largely in mutual funds. So I don't personally yet see the need to go into alternatives, but the market is always changing. Dynamics are changing. Who knows?
Hmm.
If there comes a scenario where alternatives look compelling, then absolutely.
Yeah. Okay. Fair enough. That makes complete sense. I just remembered actually Mint did a piece on Growpital as well, which is an agri investing platform providing tax-free returns. I think when you did the piece, they were offering roughly around 16%, and now it's come down to 14% tax-free. What do you think was the market reaction post that piece? Like what stood out?
So I hope that our intention was to spread awareness about the risks of this product,
Hmm.
the fact that it is not regulated, um,
Hmm.
the fact that it is the investment is done through a complicated structure, and so I
Hmm.
hope that our readers were made aware, and then after that, what they did is, of course, in their hands. Each person, decides what they do with their own money. But
Hmm.
I hope they're at least aware now.
Hmm. And do you think this kind of product might also, if it becomes too big, SEBI might bring something like farming REITs also into the picture?
I don't see why not. Of
Hmm.
course, there are a lot of complications with farming. So, for example,
Okay.
in uh, in a lot of states in India, in order to own agricultural land, you have to be an agriculturist. This means that
Okay.
you have to either be a farmer or the son of a farmer or descended from a farmer. So not everybody can just go out and buy agricultural land. So the states in
Got
question
it.
would have to change their laws. Um,
Hmm.
so this is one example, right? There are many other laws that affect agriculture, and it's not just SEBI which has to act, but then it has to take the Ministry of Finance, the Ministry of Agriculture, a lot of other government departments into confidence and work together.
Hmm. Okay, got it. Um, so talking about alternatives ecosystem again, do you think an independent body, because I think so SEBI already has its hands full with so much stuff going on. Do you think an independent body evaluating these new age platforms add any value to the ecosystem?
So it need not be an independent body, but it can be a specialized department of SEBI. So currently we
Okay.
have the regulatory sandbox in which any fintech, any startup can come and submit an idea, and it is
Hmm.
vetted. It is uh, they go through it with a fine tooth comb, and then they take it to the next stage or they reject it. So if that sandbox is not sufficiently robust right now, if it's turning off a lot of people, then maybe
Hmm.
that can be worked upon and can be made a more open architecture system where you can freely come. It becomes a safe space for you to pitch ideas and get the regulators' opinion.
Hmm. So if any of the platform owners right now maybe are watching this video, maybe they are really motivated to grow this ecosystem, but they also want to protect the investor's interest. What would be your recommendation for them?
So it is complicated because a platform owner has no, it's true. I mean, a platform owner has to satisfy so many different constituencies. They have to
Yeah.
satisfy their VC backers. Uh, they have
Hmm.
to satisfy their customers. They have to satisfy the regulator. Um, there's no hard and fast rule to any of this. But as long as you as a platform owner know that you can sleep at night, your conscience is clear, you have not in your communication you have not pitched anything misleading, then I don't think any big issue will occur. Even if you're not regulated, eventually that regulation will come.
Uh, Great. Thanks, Neil. So much wisdom out there in terms of alternative investments. Just because the overall segment of personal finance, and personal finance again is a very deep, uh, relation with oneself as to how do you want to grow your money. It's very personal. And alternative investments, in my opinion, will become part of it slowly and steadily, and might even trump the some of the other traditional segments as well. That's my personal opinion. But good to have your views as well, even if not optimistic. Even the other side counts. That's what we wanted to bring out those opinions into the world so that people can make their own decisions. And thank you so much to with helping our audience with that.
Thank you for having me, Yash. It was a pleasure being here.
Thanks, Neil, again. And for viewers who like this interaction, please do like, share, and subscribe our channel as well, and so that it reaches more relevant audience and people can learn about this new asset class. If you'd like to join our WhatsApp community, I'll mention the link in the description. A lot of discussions, polls happen on the group, and they might add value to your investing journey as well. So thank you so much. See you some other time. Thanks.